Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we are looking at New York Mortgage Trust and their recent filing. Will this company mortgage its own future or will it pay off? Let's find out. This report is all about New York Mortgage Trust issuing more debt. They've just sold a bunch of senior notes, which is basically like taking out a loan. We're going to dig into the details of this debt, what it means for the company, and what they plan to do with the money they've borrowed. Before we dive deep, if you enjoy having corporate jargon translated into easy to understand insights, hit that subscribe button. Also, be sure to join our Discord community. The link is in the description below. Scroll is a report, date of earliest event crew reported, TAV, July 8, 2025 scroll. To this document is a report about something that happened July 8, 2025. It's called a current report, used to tell investors about big news that could affect their investments. Scroll securities registered pursuant to Section X212B of the Act. Scroll, a suable New York Mortgage Trust, has several types of stocks and notes, or a debt listed on the NASDAQ stock market. These include their common stock, different series of preferred stock like Series D, E, F, and G, and senior notes, which are debts that will mature in 2029 and 2030. Scroll item 8.01. Earthmall 1, debts, text, tabs, X, debts, tabs, X, other events. Other events, stat scroll. Gexia's section is about other important events. In this case, it's regarding the sale of senior notes, which are another form of company debt. New York Mortgage Trust has sold $90 million worth of new notes or debt. This includes an extra $5 million because the underwriters, which are like the sales team for these notes, used part of their option to buy more. After taking out the underwriters' fees and other expenses, the company expects to get about $86.6 million from selling these notes. The money from these notes or debt will be used for general company purposes. This could involve buying different types of mortgage-related assets, residential housing assets, credit-related assets, and for general working capital needs. There are many documents attached that go into extensive detail, for example, the agreement with the sales team or underwriters, the terms of the debt itself, and legal opinions. So let's step back and take a look at what this all means. Issuing debt is a common move for companies, but it's crucial to understand why they're doing it and what the risks are. New York Mortgage Trust is using this money for general needs, which could mean they see opportunities in the market or they might need the cash for existing obligations. The fact that underwriters exercised part of their option to buy more notes suggests there was good demand for this debt. Investors were willing to lend money to the company. One notable aspect is that these notes are senior unsecured obligations. This means that if New York Mortgage Trust runs into financial trouble, these notes get paid before some other debts, but they aren't backed by any specific assets. Now let's move into my opinion while keeping in mind that I'm just providing insights based on accessible information. Assessing New York Mortgage Trust requires looking at both the potential opportunities and the risks involved. The company's decision to issue new debt to fund general corporate purposes suggests they see potential investments in mortgage-related assets. However, it also raises questions about their existing financial health. One of the biggest risks for New York Mortgage Trust is that if interest rates go up, it could become more expensive for them to borrow money, and if the assets they invest in don't perform well, they might have trouble paying back their debts. In conclusion, New York Mortgage Trust is navigating a complex financial landscape. The issuance of new debt presents opportunities for growth, but it also carries significant risks. Investors should carefully consider these factors before making any decisions. Alright, that's our breakdown of New York Mortgage Trust's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.